Hello, this is the TradeState U.S. Stocks and Futures Market Preview for the week beginning Sunday, the 24th of March, 2024, ending Friday the 29th. Please be aware, Friday the 29th is a U.S. bank holiday. It's Good Friday ahead of Easter, so we're closed. So it's only a 4-day week, and Friday is not going to be anything. So the levels for the following Monday, which is the 1st of April, April Fool's Day, uh, are based on the Thursday close. And having said that, just so you're also aware, most of the world is actually closed on that Monday. They're not closed on Friday for Good Friday. They're closed on Monday, the day after Easter. So they're usually two wasted days. It's interesting also because that means that the end of month for stocks will be Thursday, the 28th, because Friday we're closed. Saturday, Sunday's the 30th, 31st. So statement printing is effectively Thursday. So that's going to cause a little lull. So if there's anything to happen, it'll have to be Monday, Tuesday, Wednesday. Probably Tuesday, Wednesday, more likely. Thursday likely dead. Friday closed. Long weekend, and we go from there. Having said that, let's get to work. Here's the dollar index daily chart. We did pull back a little bit this week, but we're still literally dead in the middle of the range for the last year. Here's the the euro dollar, which, by the way, this time did not go the inverse of the dollar index. Interest rate situation is changing. That's what's going on there. So we're actually dipping here as well. We got the pound dollar pulled back a bit. By the way, look at that. Even though that 13 signal is kind of weak in my mind because the 1 through 13 is very flat, look at the way that risk line got used. That's kind of ridiculous, right? The pink risk line, 1.2897, that was the high, and then we rolled over. So very interesting. ES front month futures contract, daily chart of the broad market futures form. Look, we've been on a big run here. The economy's strong. We're up 1,200 points, in the last 5 months. That's a 25% gain on the S&P. Probably not going to hold. Obviously, you got to figure there's something, got to be a pullback in here, but you never know because if interest rates aren't going to go up, if they actually do start cutting rates, who knows what that means. But right now, the market's on a tear, and it has been since that late October point where we always talk about the inflection in the market and things reversing, and it did, and it's just been unbelievable. S&P cash looks about the same. We broke the risk line of the 13 sell signal, so that's no longer in play. NASDAQ 100 also at closing at all-time highs. Today with a little gap up, whatever. Russell 2000 now back to highs as well. So everything's at highs. Look, this is it. Like strong economy, strong everything. Everything looks really good, and that's despite the fact that Apple's getting its we won't say anything inappropriate, but getting hurt here, and it is what it is. Bitcoin pulled back a little bit, sitting around 64,000 as I do this. TLT, the 20-year bond ETF, mid-range for the last 6 months. Maybe at the top of the range for the last 6 months, mid-range for the last 9 months. Let's go that way. So rates down, bonds up, rates up, bonds down. Bonds up, rates down, and so we're kind of middle of that. So we're off the lows on the mortgage rates for now, at least. The VIX closes at 13.06 after making a pretty big dip this week, almost got some new lows for the year, which is horrible because it means that the market volatility goes away, and that's what we live off of, right? So if you look at the flat days we saw this week, besides the Fed, well, that's because the VIX is just so freaking low. It's just ridiculous. Advanced decline ratio on the NASDAQ has been back and forth, a couple of good days, a couple of bad days. The trend closes the session at 1.77, puts the 10-day moving average at 0.98. That's the orange line. We don't have it under the blue line, which is 0.85, so there's nothing there to really talk about. Here's the week and 10-minute candles on the ES. So the far left is the prior Friday. Gapped up, pretty flat day Monday, little drift lower, gap down, never filled the gap from Friday, came up and filled the gap from Monday night into Tuesday morning, and went a little higher. At that point, we've been done nothing. Wednesday flat all day until the Fed then shot up. Thursday gapped up and then pulled back a little bit. Friday pulled back to open flat, but pulled back to fill the gap from Thursday's open, and then closed there too. And so at the end of the day, a small gain on the week, and the Nasdaq's pretty much the same as the Nasdaq. So we gained this week, but we filled all the gaps on the Nasdaq side, which we did not do on the ES or the S&P side. All right, Apple obviously in some trouble here with the DOJ thing, which I think is well deserved. Amazon holding near highs. Meta 13 sell signal on the seeker on Meta. The risk line's already in place. We're approaching that. We'll see if Meta tops out right here. That's going to lead to maybe a 120 point pullback in Meta. That would be interesting. Google back near highs. Nothing going on there. Goldman Sachs. I kept commenting on how bad this was. Like this, look at this thing from December all the way until March. So flat, and then finally broke out. So and then reversed. So we'll see what that means. Netflix closing near highs and had new highs this week. Tesla, yeah, not so much. Like sitting near lows, didn't make any new lows this week. Nvidia, this is the highest close on Nvidia yet, but we are getting close to. So this is an 11. If I go to projection mode, there's an 11. So 2 more days gets you a Seeker 13 sell signal on the daily chart of Nvidia. Zoom doesn't look great at all, even though it's mid-range. There's some other signals in the shorter-term time frames. And First Solar, we like to watch this one too. Dead flat for 7-8 months, but I mean, whatever. It is what it is. All right. In terms of economic data coming out this week, which is always one of the other things we look at besides the holiday schedule and the end of month schedule, we definitely have both of those. We have, hold on, my thing's not showing properly. Sunday, nothing. Monday, new home sales at 10 a.m. Eastern Time for here in the U.S. Tuesday, 8:30 a.m. durable orders. S&P Composite Housing Price Index at 9 a.m. Consumer confidence at 10. Richmond Manufacturing at 10. CPI out of Australia going into Wednesday. Here in the U.S., nothing. And then crude oil inventories at 10:30 a.m. We've got a Fed member speaking after that. And then Thursday, GDP number and the weekly initial and continuing jobs claims numbers at 8:30 a.m. Eastern Time. Chicago PMI at 9:45. Pending home sales and revised University of Michigan sentiment at 10. We've got bank holidays out of New Zealand and Australia. And then we go to Friday. Obviously, here the U.S. is on holiday. They're still releasing personal income and spending and preliminary wholesale inventories, despite the fact that we're on a holiday for that day. And the Fed chair speaks. The rest of Europe does their daylight savings time shift on Saturday going into Sunday, so that'll bring us back in conjunction with them after being off for 2 or 3 weeks, and it is what it is. Not much other data out there, and that's about it. So charts as usual brought to you by NinjaTrader. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple of weeks, and we have some exciting stuff we're working on right now. We've announced some of it over email. You can chat with us, but please follow us. We're going to automate a lot of your signals. Thanks.